Peloton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there with an update. Hey, we're keeping an eye on shares of Tesla as well. Stock down about 3.5%, just off their lows. And they have backtracked nearly 25% since March 31st. We continue to see Elon continuing to shape strategy that includes betting the house on low prices and razor-thin margins. So this story is today's Bloomberg Big Take. It's also the upcoming new issue of Bloomberg Business Week on newsstands later on this week. Tomorrow, in fact, already online at Bloomberg.com/businessweek and on the Bloomberg terminal. So let's get to it. Let's get to Bloomberg News Global Czar, Car Czar, Craig Trudell. He's on the phone in London. Craig, good to have you here with us. So yeah, it does feel like every day we come in and there's either another price cut or some kind of price move from Elon. Tell us a little bit about your story and this strategy of Mr. Musk's.
Yeah, we'll see if I wake up to another one overnight. They tend to be right in the middle of as I'm sleeping. So, I mean, this has been a story of just, relentless cutting all year long. And we really started to see hints of it even late last year, whether there were some cuts in China or some incentive offers in the U.S. But in the end, we're now to a point where it costs almost a third less to buy a Model Y now than it did just a little over 3 months ago. And this is just something that we haven't seen before, right? It's not a model that, is really, low volume or has been in this, market decline. If anything, it's been their strongest model, and it's potentially, it could end up being the best-selling vehicle in the world this year. And yet, it's a case of adding a heck of a lot of capacity very quickly, and the model itself, going into that process being quite high price, being high volume, and yet with all that capacity coming online and real changes in the sort of supply-demand dynamics for the broader industry, all of those things have sort of combined to also, I guess, add in a CEO who is sort of prone to making very sort of sudden changes. And boom, you get yourself, these massive, price cuts in the last few months.
Craig, does it work for the company?
I think that's a question that's really difficult to answer, because you have, really smart people who come to just radically different conclusions where, some will tell you it's desperation, and some will tell you it's just disruption. And you may even actually hear it, hints of that in the same answer from the same person. And I allude there to Jim Farley, the CEO of Ford. He's talked about, just last week, he told reporters, look up 1913, and he was referring, of course, to Henry Ford and the Model T, and how quickly Henry Ford dropped the price of that car when he sort of had an edge on the rest of the industry and had, innovated with the moving assembly line. I think, Musk thinks that he's pressing an advantage here, but I also don't think that you cut your prices that much that quickly from a position of absolute strength. It's clear that he's, to some degree been pushing on a string here.
But I do wonder, is this about, forgive me, going after the masses more easily? Because these cars have been, even the lower end, pretty expensive.
Yeah, just last year, you had to pay $65,000 plus for a Model Y.
Yeah,
so, this was not a cheap vehicle. It's now to the point where you can get it in the mid 40s, and that's something that we haven't seen before, where that vehicle was not anywhere close to what the average transaction price was in the U.S., and now it's slightly below it. And so we've seen that change. It's been about $20,000, change in the differential. Our colleague Tom Randall had a great story on this yesterday. He's been very closely following those numbers. So, it absolutely is the case that he's unlocking, a greater market, but to what extent is he able to sustain the Model 3, which is older, and then you have a sort of very different story with the Model S and the Model X, which are very old and really having a hard time.
It's interesting what I thought in your story, and you took us back to the Rick Wagner days at General Motors when he was CEO. Do you think it's fair, share with our audience, that comparison, but I do wonder, is it fair to make that comparison? Because I would say that it feels a little different.
Oh, it's definitely different. I do think that the sort of similarity there is, a story of a company that has a heck of a lot of capacity, and has to make some difficult decisions when it's having trouble getting demand for the capacity that it has. I think the comparisons maybe do to your point end there, and I think there's a great chart in our story today capturing what's happened to the cash and the debt on Tesla's balance sheet. We saw in 2019 and 2020 Tesla raised a ton of money from Wall Street, and in the last few years has itself added to its cash balance from its own operations, and in the process it's also paid off about $10 billion worth of debt in the course of 3 years, and that's why just recently we saw Moody's raise Tesla to investment grade. So
it's a great chart. It's Tesla, how you want it to be.
Yeah. Is Tesla in a structural state anywhere close to where GM was? Absolutely not. But I do think the sort of it's funny we sort of thought that Tesla was something different and not like other sort of old line car makers, but this idea of sort of as we saw in 2001, just sort of resorting to discounting to sort of move the metal, it definitely rings, it sounds familiar there.
So why aren't they pouring that money into generating freshness, which I'm stealing from one of your sources, but Carol and I get a lot of our best ideas, or I do at least, from the makeup room, and what they always talk about is the lack of availability of different colors of Teslas. I know that sounds silly, but is something like that on Elon Musk's mind?
It's a good question. I mean, I don't think that they've really sort of talked a whole lot about, significant changes to the product. And of course, you always sort of run the risk when you sort of, dangle this sort of next thing that you sort of have the consumer wait for the changes to come. And we may be seeing that a little bit. I think there's been reports recently that the Model Y and the Model 3 are going to undergo some upgrades fairly soon. And so are we seeing some consumers hold back and wait for the fresher models? I think another fair question to raise here is, if you're a consumer, why the heck would you want to buy a Tesla right now when the prices are coming down so quickly? Why not wait a little bit more and see if these prices sort of settle down a little bit before you go out and purchase something that a few weeks later might the price may depreciate another $2,000
or go up. I'm just going to say there's the flip side.
Yeah, exactly.
No, Elon. Hey, I am curious, Craig. Is Tesla going to be like any other car maker though? That like every year there's a new model. It doesn't feel like Elon just does it so differently. Should we expect as consumers that that's how he's going to do it, or is it going to be akin to Apple Watches? Or something that come out every few years? How do we think about that when it comes to Tesla?
I think absolutely that's an observation that he has very much sort of bet on this idea that I don't need to sort of regularly do these redesigns the way the industry has been doing for a long time. I can make these incremental improvements to my product with software, and to his credit, he's done that in a way that I don't think the incumbents are still caught up in terms of the over-the-air update capability that Teslas have, and it's still an edge that Tesla has over the rest of the industry.
Right.
But that being said, I do think that the consumer has been sort of trained over the years to expect this model will at least get a bit of a freshening up, a bit of a nose job on it, something to get me excited. They did try to do that with the Model S and X a couple of years back.
Yeah.
It just didn't really go over that well.
I'd love to not have to keep replacing things. It kind of works for me. Sure. Craig Trudell, great story. Thanks for hanging up later there over in London. Craig is Global Car Czar here at Bloomberg News. He is joining us on the phone from London. That story, by the way, in the upcoming new issue of Bloomberg Business Week on newsstands tomorrow, already at Bloomberg.com/businessweek and on the Bloomberg terminal. What color does everybody want it in the makeup rooms?
I think they just want variety. I think they just want fictional options for when they don't buy
room conversation.
Yeah.
All right, let's get off to World and National News. We head to Nancy Lang. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. Speaking alongside South Korea's president in the Rose Garden this afternoon, President Biden was asked by reporters about his age heading into another presidential campaign. He says it's up to the voters to decide if he's up to the job.
They're going to judge whether or not I have it or don't have it. I respect them taking a hard look at it. I take a hard look at it as well. took a hard look at it before I decided to run. And I feel good. I feel excited about the prospects.
If he does win re-election, he would be 82 on Inauguration Day 2025. A well-known Republican mega donor from Silicon Valley is reportedly sitting out the next year.
PayPal founder Peter Thiel has reportedly told associates he won't donate to any 2024 candidates. That's according to Reuters, citing two people close to the tech billionaire. One source says Thiel thinks Republicans are making a mistake, focusing on cultural issues like abortion and restricting transgender rights. He thinks they should be more concerned about spurring U.S. innovation and competing with China. The source says Thiel had more hope the GOP would concentrate on the economy when he spoke at the Republican National Convention on Donald Trump's behalf in 2016. In Washington, I'm Nathan Hager, Bloomberg Radio.
E. Jean Carroll, the woman accusing Donald Trump of rape, is on the witness stand today. She's been testifying in graphic detail about the alleged assault in a Bergdorf Goodman dressing room in the 1990s. She opened up her testimony saying she was there because Donald Trump raped her, and when she wrote about it, he said it didn't happen. The jury will need to decide if Trump is liable for sexually assaulting Carroll and defaming her on social media. The vast majority of Americans obtain their news from a public figure they follow. According to a new Gallup poll from the Knight Foundation, close to 90% of Americans follow at least one public individual for their news updates. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index at the low of the day. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are mixed right now as the First Republic worries continue. Dow's currently down 277 points. S&P's dropped 20, and NASDAQ is still higher by 50. The U.S. 10-year yield at 3.42%. Gold is down 7. Oil is sinking, and Bitcoin is higher by 4%. Of the main 11 S&P sectors, only tech was in the green, and leaders to the upside in the Dow, Microsoft and Boeing, while Home Depot fell 3% and led to the downside. After earnings, Chipotle rose as much as 15% to an all-time high. And in deal news, Microsoft's $69 billion Activision deal was blocked by the UK. In other news, First Republic fell 30%. The company is said to face a potential curb on borrowing from the Fed, and Disney sues Governor DeSantis. That sent shares to session lows. Wrapping things up, Facebook reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, got about 17 and a half minutes left in today's trading session, the Wednesday trade. We're, of course, getting Meta earnings after the closing bell, a few others as well. Charlie breaking down the trade for you, and you do see stocks continuing, certainly in the broader market. Really, we've got everything near its lows of this session. The NASDAQ now just up about 0.4%, so well off its earlier gains. So let's get to it with Walter Todd. He's President and Chief Investment Officer at Greenwood Capital Associates, joining us once again on Zoom from Greenwood, South Carolina. Hey, Walter, nice to have you back here on Bloomberg. How are you?
Doing good, Carol. How are you?
Doing okay, you know, in the thick of earnings, making our way through it and trying to make some sense of it. Any clear tone or direction that you are getting off of earnings so far?
Yeah, well, today is kind of a microcosm of the year, and by that I mean you've got the S&P itself down about 0.5%, but the equal weight S&P down, well over 1%. So kind of this mixed market where the average stock is not doing nearly as well as the big guys. So that's Microsoft today. Outside of those earnings more recently, I would say in general, we've gotten some kind of themes here. Healthcare equipment is doing very well as hospitals return to normal after COVID, for example. But we're also seeing some pretty definitive messaging on economically sensitive areas. So 3 reports in the past 48 hours, UPS, EKG, and ODFL, Old Dominion, very similar message saying March slowed really significantly. So that's a message that I think we need to pay attention to. And I know everybody's focused on Meta and Amazon after in the next 2 days, but I think maybe Caterpillar, Honeywell, the U.S. Steel might be more telling of the economic environment.
What was the second one? You said UPS, Old Dominion. What was the middle one?
Packaging Corporation of America.
Oh, okay. Got it.
Yeah.
So I wonder then to what extent you mentioned the slowing indicators, the slowing economic indicators, but I know that you also talk about how we might be underpricing earnings and we're getting a lot of earnings beats this season. So which one, earnings or economic data points indicating slowness? Which one do you watch?
Yeah, depends on the day, right? But for us, I think the low bar that companies are stepping over here because earnings were revised down pretty significantly heading into the quarter. I think it is the guidance, though, right, which is speaking to this economic slowdown and weakness that we see coming right now and in the second half. If you look at the GDP now, for example, from the Atlanta Fed, that was 2.5% last week. It's now 1.1%, and we'll get the first look at first quarter GDP, I think tomorrow. So we'll see what that looks like. But for us, it's probably more the risk in the back half to earnings due to slowing economic growth.
It's interesting that you say that. Our Jess Metten has a story out on the Bloomberg, and she talked about it on air, but this whole idea that we've already seen the earnings recession, Walter, and that we've already gone through that. So then you start to think about where does the market is forward looking. So are we at that point where the market's looking maybe into, is it possibly already next year, that we've had the worst for earnings? How do you see it?
Yeah, so it's either looking like straight down at its feet, or it's looking very far into the future.
That's funny.
So I still think there's a risk to earnings in the second half of this year. So you're right. We have seen two consecutive quarters in a row of negative earnings growth. We've got a third probably coming next quarter. But the back half, most analysts still have a pretty big rebound in earnings. I still think those probably need to come down a little bit. But you're right. I mean, the market is forward looking. However, if we are in fact going to have a recession, the market's really never bottomed before the recession has started. So that's the debate right now.
Well, I wonder also to what extent you're looking at your holdings with Microsoft versus Google. I know you've got both, and we had great earnings from both yesterday, but which one are you more excited about today?
I would say right now, just on a valuation basis, that Alphabet looks more enticing here. It trades at about a 33% discount to Microsoft, trades about 20 times versus 30 times for Microsoft. And it's actually going to produce probably $8 to $10 billion in more cash flow per year than Microsoft. So the risk reward right now, I would favor Alphabet, although, again, we do hold Microsoft as well. But we did pare that back to a model weight for us today on this strength.
You sound a little bit more negative than positive. Is that fair, Walter? And I'm looking at my notes here, and you think the Fed should not raise rates again on May 3rd, but you do believe that they will. Are you more negative at this point, or a little bit more cautious at this point?
Yeah, I would say cautious is the right word. I mean, we've been trading in this range from 3,800 to 4,200 in the S&P for a while now. Obviously, we got below it in October, but we touched the kind of towards the upper end of that range. I think there's risk to trading back down. The debt ceiling's still hanging out there. We haven't really touched on that yet. That's a risk, a policy risk in the coming months. And we got a lot more earnings to go over the coming weeks. So I would say probably just a little bit more cautious right now.
And when it comes to bank stress in particular, how concerned are you about the 6-month outcome of that?
Yeah, I think the kind of the downside of that situation is that credit conditions are going to continue to tighten. So you look at the senior loan officer survey that we get from the Fed. The last one we got was in January. Next one will be May 8th. But even in January, before the bank failures, 44% of senior loan officers said they were tightening lending standards to small businesses. You got to imagine that's going to go up. So credit conditions are going to tighten. And it's probably going to contribute to an already slowing economy in the second half.
How do you make sense of what we got from Visa? And we know people are traveling, but cross-border spending, that growth unexpectedly was accelerating, and they expect it to continue, that increase in global travel demand. Is that optimistic, or do you think that's an outlier and just everybody wanting to travel at this point?
Yeah, no, I think it's a good point, because we're talking, the conversation to this point has been about the U.S. economy, right? And we haven't talked about the global economy more broadly. And we heard from American Express last week, they called out strength in Europe and Asia. So we are seeing some strength emerge in some of these other economies, China reopening, obviously. And I think that's what you can kind of attribute that Visa news to. We'll get MasterCard tomorrow, which should be even more focused on the international side of things. So there are some bright spots, perhaps outside the U.S. At least the companies are pointing to that during these earnings calls.
What are your investors? Money coming in, new money coming in, people kind of waiting this out to kind of see where this cycle goes next? Just got about 30 seconds.
Yeah, no, well, we're fortunate to getting some new clients and new money coming in, and from our perspective in terms of investing that, we don't want to try to necessarily guess the timing of the market, but at the same time, we're willing to be a little bit more patient, perhaps, than we would normally would be in putting that money to work and being opportunistic with the volatility. But we're very encouraged with, the account growth that we're seeing.
All right, going to leave it there. Hey, listen, great to check in with you again. Take care. Walter Todd, he's President and Chief Investment Officer at Greenwood Capital Associates, joining us on Zoom from Greenwood, South Carolina. So, yeah, interesting. I mean, this is why the earnings cycle is so important, to see what the results are, what kind of outlooks we get, and whether or not it justifies some of the valuations out there.
Yeah, and whether we're, slowing or speeding up. up economically.
Exactly. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Walt Disney is suing Florida Governor Ron DeSantis, alleging he is retaliating against the company for speaking against his policies and threatening billions of dollars in business. The company filed the lawsuit in federal court in Tallahassee, Florida. Walt Disney shares down now by 1.5%. Microsoft's $69 billion takeover of Activision Blizzard has been vetoed by Britain's antitrust watchdog in a potentially fatal blow for the video gaming industry's biggest deal ever. Microsoft shares, they're up also after earnings, up by 7.2%. Activision, though, that stock now down by 11.3%. We are minutes away from the latest numbers out of Meta Platforms, a stock that this year is up 74%. Mandeep Singh is a tech analyst at Bloomberg Intelligence.
I do expect some ad pricing headwinds in the results tonight, but when you are cutting $10 billion in costs, I think it's always a good story to sell, given we know these models are so good in terms of, throwing out free cash flow. So that's what's driving the stock right now.
right now, we do have the stock up by 1%. Boeing says it plans to accelerate output of its cash cow 737 jets later this year, and it is reassuring investors that a recently uncovered manufacturing defect will not dent its delivery and cash targets. Boeing shares up by 0.4%. Those are the company stories we're following this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just under 5 minutes left for the wrapping up of the trade, the closing bell, of course. So we've got Meta earnings, we've got Roku, we've got KLA Tencor. I know I'm missing somebody, ServiceNow. So we're going to be breaking those earnings with our TV colleagues in just a moment. In the meantime, a couple of stories we just wanted to quickly mention. You heard Charlie just talk about Disney a little bit and what's going on in Florida, but this story is among our most read on the Bloomberg. It has to do with Jeffrey Goodlock saying an Internal Revenue Service agent showed up unannounced at his company's office in Tampa, Florida, also in Florida. His latest complaint aimed at tax authorities. Agent showing up for, quote, no legitimate reason. This is, of course, the Double Line Capital co-founder. He put out a tweet late yesterday without providing further details. It's kind of like, wait, what?
Wait, what's happening here? I know, and this comes after, by the way, he moved the main office of his money management arm to Florida. He's been very vocal in his criticisms of the tax and quality of life situation in California. And this is, you know, a lot of investors are moving to Florida after this, but he's also been not only critical of California's politics, but critical of the IRS and the U.S. tax system as well. So two very divergent forces here.
Yeah, just, you know, keep in mind, you know, the IRS does this, and it definitely does audit rich Americans. So it's not uncommon for it to conduct site visits of businesses, though such enforcement activity has become rarer as the agency's budget has been squeezed. We did that great story that was in Bloomberg Business Week about that they're using antiquated technology, no technology, and they're really, in terms of labor and a labor force, they really need a few more agents and support staff.
They really do. And we should mention also an IRS spokesperson did say that the IRS deeply respects taxpayer rights and follows very specific guidelines before contacting taxpayers. And that was in response to this situation in Tampa. But this is also, to your point, Carol, it's not just a move from the IRS. The Biden administration has been pushing for more of this kind of oversight over the wealthiest taxpayers.
Yeah, to make sure that people are, you know, paying their fair share. And that would certainly help out the government, help out the IRS, and just be the right thing to do, especially if folks are avoiding taxes. So anyway, it's among our most read stories on the Bloomberg. All right, you are listening and watching Bloomberg Business Week on this Wednesday. Get ready for Meta earnings. Get ready for earnings from Roku, from KLA Tencor, a few other names. We're going to break it down. Right now, we're heading over to our TV colleagues. Counting you down because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with our friends Carol Masser and Madison Mills. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and those folks streaming on YouTube. Not far off the lows of the day right now, Carol, on stocks. The only bright spot really is a small cohort of tech stocks, including Microsoft.
Yeah, and that also includes Meta, which is going to report any moment from now. This is a name that's up, 74% so far, and we know it's been taking a beating before that, but nonetheless, quite a rally that we're seeing here in 2023, and it's up about another 1% in today's trade, guys.
Yeah, and those big tech names are sort of driving some of the rally, but not all of tech is in a happy phase today. We're seeing that the semiconductor subsector is just eking out a gain, and technology hardware is posting losses today as well, Scar.
I just want to follow up on Meta because we were talking with David Bahnsen earlier, and he was saying that his advice to all these companies that have so much cash is to start paying dividends because too much cash leads to ill-considered M&A that can blow up in their faces, or in what we've seen recently, attracting scrutiny from regulators. But he says really it's a cultural issue more than an economic issue.
And looking at the cross-asset look right now, the VIX is slightly higher here on the day. You're actually seeing yields higher just a bit here on the longer end of the curve, though lower for that 2-year yield. And as far as just the market technicals here, I was taking a look at the S&P 500, the 50-day moving average that sits right around 4,033, a big test of that right now as we get these closing numbers. The Dow Jones Industrial Average deep in the red, down by about 200 points, or about 0.7% here on the day. The S&P 500 looks like it's going to close down by roughly 15 points, or 0.4%. The NASDAQ remains the bright spot. It's been in the green for all day long, up on the day by about 0.5%. Meanwhile, the Russell 2000 lower by roughly 0.9% on the day, guys.
Yeah, and remain definitely a negative tone. If you look at the S&P 500, most names in that index down, 410 to be exact, 92 to the upside, Scarlett, 1 unchanged, but really a lot of selling across the board here.
And a lot of red when you look at the S&P 500's 24 industry groups as well. Let's start with the green because there's so few of them, right? Software and services, that's all Microsoft. Retail, mainly Amazon. Chip companies, you've got NVIDIA helping to lead the way along with Micron, and consumer services all eking into the green. On the downside, auto and components, transportation, utilities, a lot of cyclicals there.
All right, so let's get to some of the individual names as we await those earnings. Some of the gainers, you know, Microsoft, top in the S&P 500, NASDAQ 100, highest level in more than a year, adding a record value amount to its market cap, and that's despite the UK blocking that Activision deal, at least for the moment. You know all the results. Third quarter beating expectations, strong cloud demand, so certainly outperformer.
I'm curious, do you think that that share reaction that we saw in Microsoft would have been as strong if the Activision deal had gone through?
If it had gone through?
Yes. Carol.
You think there would have been disappointment that the deal went through? You mean dilution and so on?
Carol.
What?
Never mind. Move on.
No, wait, hold on. This is interesting. You're thinking, you're thinking that because it didn't go through, investors are cheering that and the stock is higher?
Yes, that's what I was getting at.
Why is that? What's the?
I don't know. I was asking Carol. I thought she.
Sorry, I actually lost my IFB for a moment.
Oh, okay. So Carol just didn't hear me. Just go on, Carol.
Anyway, all right. So let's get. So Microsoft certainly a standout performer. Forgive me there. Chipotle top in the S&P 500 as well. This one was up 13% in today's session. First quarter sales and profit beat. Same store sales were a blowout number, almost 11% there, way outperforming, and they can still raise prices. That stock's up about 50% so far. And then you had PacWest Bancorp. That one was up about 7.5% here. We broke it down also after the close yesterday. Deposits stabilizing after it had a bunch of withdrawals in March. So you definitely saw some outperformance in that one. Scarlett, we got some earnings.
Yeah, I just want to jump in here with Roku, which is the leading streaming platform. It's what Maddie and I use to watch Succession every week. Roku reporting first quarter net revenue that beats analyst estimates, $741 million. The consensus estimate was $708 million. And if we look at the stock and how it's performing, is there a trade right now? It is at $58.99. It closed at $56.56. So yeah, it is moving higher right now. We only have that headline right now, but at least on the top line, this is a beat here for Roku.
All right, yeah. So Roku up about 6% here, but we are awaiting some other earnings. Of course, Meta is going to be interesting, whether it's the shift to the metaverse. But remember, last time around, you know, some conviction in terms of the old business model. So we'll see whether or not that comes through ultimately, and how that helps in terms of the trade. In terms of what we're seeing in terms of tech trading, if you will. So Roku up about 4% here in today's session, as you said, in the aftermarket, and as you said, revenue looks like it did outperform.
Yeah.
And if you look at first quarter loss per share, that's $1.38. That's a little bit smaller. So we're going to have to dig into some of the details to see why there's some disappointment here. Maybe, folks want them to do even better.
Well, Roku's one of those companies that can earn money or make money both from advertising on its platform side through digital ad sales, and also through the hardware sales of those consoles as well as the embedded software. So it's been in a good leading position, and of course it had a tremendous year in 2021 and maybe not so great a year in 2022 like everyone else. In terms of its forecast, it sees net revenue this quarter of about $770 million. That too is better than anticipated, which was $764 million, the consensus estimate there. So a beat on the top line, line for the quarter that ended and a beat on the top line for what it sees going forward.
And now up 2%, and it was up about 40% 2023 so far.
Yeah, and it's such an important indicator when it comes to the advertising story as well, like you were both saying, Carol and Scar. And also, when we're talking about Roku, I just want to mention again, it looks like shares are gaining about 6% post-market after that revenue beating estimates. And I think that, I mean, this is big because we weren't expecting that, Romaine.
Yeah, we weren't expecting that. There, I think, are still some longer-term issues with how they've positioned themselves. Of course, that push into original content as well. It'll be interesting to see the type of guidance they give on that spend. I know that's something that I've been looking for here, whether they still think that that's worth it. Because remember, when they rolled it out, the market was a lot different. We talk about, a year or so ago, things have changed, and it'll be interesting to see whether there's pressure from investors to actually rein in some of that spending.
It costs a lot to make shows, quality TV shows.
Well, and they talk about this in the press release.
Which show are you talking about?
Succession.
Oh.
She's talking about Succession.
Our show, yeah, in our show.
They also say they're committed to delivering positive adjusted EBITDA for fiscal year 2024. So they're talking about kind of the outlook here. In the press release, they're also saying that they're managing investments and costs and executing on their plan to deliver that positive adjusted EBITDA.
All right, a few other earnings crossing the wires, guys. Let's go through them. Mattel, eBay, KLA, Tencor among the few. I'm going to start off here with eBay. Those shares crossing the wire right now. Continuing operations, adjusted EPS, $1.11. The street was looking for 107. That's a beat. Gross merchandise volume coming in at $18.4 billion. That's a slight beat over street consensus of 18.2. And your net revenue on the whole at about $2.5 billion. This is roughly a beat across the board, but minor beats to be sure. So we're going to just call this in line. The shares, you can see, unchanged right now. Their guidance, Scarlett, going forward here, 2Q net revenue, also relatively in line, a range of 2.4 to about 2.5 billion.
All right, and we also are looking at Mattel, which is reporting a loss for the quarter. That was expected, losing 24 cents in the first quarter. Analysts were looking for a loss of 22 cents, so that's wider than expected. Net sales, a big beat here, $814 million versus the expected $756 million. And in terms of its outlook, it sees the full-year adjusted gross margin of about 47%, slightly higher than what analysts were looking for, which was just under 47%. And EBITDA for the full year, 900 to 950 million. Analysts were looking for 919 million. So if you take the midpoint of that range, it is higher than the consensus estimate that that analysts were looking for there.
All right, let's go back to eBay just for a moment, because here's the red sticky. Second quarter net revenue, $2.47 billion to $2.54 billion. So giving you some indications of the outlook there. The estimate that's out there is $2.43 billion. So eBay's up 2.9%. Flip it on over to a chip name, semi-equipment company, KLA, is out with their numbers. Third quarter adjusted EPS, $5.49. That is compared with the estimate of $5.25. So that is a beat. If you look at their third quarter revenue, also on the upside there, $2.43 billion. The estimate is for $2.36 billion. But we're seeing that stock under some pressure, down about 1.6% here. And this stock has been underperforming the stocks, Maddie.
And quickly going back to eBay, I also want to mention that the board has declared a cash dividend of 25 cents a share as well. Going back to your point earlier, Scarlett, what your guest was saying about companies having cash for these dividends and what they intend to do with that cash. Another interesting part of the eBay story.
Give it back to shareholders.
Yep. Yep. And
his words, not mine.
Well, and on the Mattel story too, I'm also interested because the stock is still up by about, I want to say 105% over the last 3 years.
Yeah.
That's still outperforming S&P returns. And then I have to mention the Barbie story because it's hitting every company. It's trending so hard right now. You have to wonder whether that has an impact.
You're talking about the Barbie movie, right?
Yes.
Yeah.
It's a boon for Mattel. It's a boon for retailers that are picking up on the hot pink trend. I know it sounds silly, but we're seeing this everywhere.
No,
it's in the zeitgeist.
No, believe me, I have this on the calendar here. There are not too many movies I'm excited about this year.
July 21st,
but after I saw that trailer, I was all
squad
in.
is going.
If there's anything to get me back into the theater, this is going to be it.
This is Romaine's must-see for 2023.
It is, and to Maddie's point too. I mean, the fact is that we're talking about Barbie in a way that we probably haven't been talking about that product in quite some time here, which is exactly the point of having movies like this.
Yeah, well, listen, that's what Mattel is doing. They're trying to take their actual actual toys and leverage it into content. And they were moving in a big way. I just want to mention some commentary from the CEO of KLA Corporation talking about a challenging industry environment. So we're going to watch some of these chip names because this is certainly a great indicator of the overall economy.
Yeah, well, speaking of chip names, I should point out we are still waiting for Meta earnings to cross. Wolfspeed did come out. Those shares are actually down about 8% right now. And I thought it was interesting here. Most of their main numbers, at least for the quarter, did actually beat. But some of the guidance that they gave was certainly a little bit soft. And there's been a lot of talk here about where we are in that chip equipment cycle here, whether we sort of hit the trough or whether there's more to come here. Another indicator in the chip space that maybe there is still a little bit of pain out there.
All right, so we're, of course, still awaiting Meta, and I'm just looking at if there's any kind of movement here ahead of earnings. It's just up about 0.4%, but we'll wait for that company to certainly cross. All right, guys, that is a wrap, at least from the bell. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody, it's 4:09 on Wall Street, and as you know, the market's closed, but we've got a slew of earnings. We still are awaiting Meta, so as soon as they cross the Bloomberg terminal, we'll bring them to you. ServiceNow is just crossing, and I just want to do a quick break on that, certainly playing into, here's Meta. Let's go to that, actually. Meta is crossing the Bloomberg terminal, and let's go to first quarter EPS, $2.20 a share. That is 19 cents better than what the street was expecting. First quarter revenue is $28.65 billion. That, too, is better. The street was looking for $27.67 billion to the forecast. Meta Platforms sees second quarter revenue of $29.5 billion to $32 billion. The estimate is $29.48, so it's raising it to the upside. Quick check on what the stock is doing in the after hour, especially on that upbeat outlook. Stock is up almost 9% here in the after hours, so that is a big deal. First quarter advertising revenue, big reason in terms of top line growth here, $28.10 billion. That's a beat. The street was looking for $26.76 billion. And then you get into certainly Facebook daily active users, 2.04 billion. Maddie, that is better than what the street was expecting, just by a hair.
And it's really critical to look at that Facebook advertising recovery, because that was going to be one of the key pieces to watch. The other thing that I'm really interested in seeing is how Zuckerberg, when it comes to the earnings call, looks at the metaverse versus AI conversation, because we know that that's going to be a tightrope for him to walk.
Well, first quarter Reality Labs revenue, right? That plays into virtual reality, augmented reality, $339 million. That's a miss. The estimate was for $613.1 million. Again, small part of the business, but this is a lot of what it talks about when it comes to the future. We want to bring in our guest, and we'll continue to track these earnings. Do also want to mention that the outlook for Meta includes $3 to $5 billion worth of restructuring costs, and it's talking about fiscal year total expenses of $86 to $90 billion. It had seen $86 to $92, so reining in at least the top end of that. Lucky for us, with us is James Chakmak. He's partner technology analyst over at Clockwise Capital. He's with us on Zoom from Miami. James, nice to have you here with Maddie and myself. So let's get to it in terms of Meta. Stock is up in the after hours. How do you see it?
Well, we're really glad with the result, given it was one of our top positions, and so happy for us and happy for our clients. That being said, this is a company that took the bull by the horns when it came to getting religion on the cost side, and I think as we anniversaried in January the advertising changes at Apple, the setup was pretty well for the year. Now, the question for us is the only remaining uncertainty as it relates to the Meta story is what is the degree of the recession, what is the depth of the recession, and how does that impact discretionary ad spend? So, fundamentally speaking, it's everything is moving in the right direction. But just will we potentially see softness in the numbers in the second half? But overall, we're pleased with the result.
And context, right? Those first quarter sales, as we said, up to $28.6 billion. That's a return to growth after 3 straight quarters of declines. That's a good thing, because the trend line in the other direction wasn't so good.
Yeah, absolutely. I mean, last year was a very difficult year for them. I mean, they had to navigate and recalibrate for the new world that they were dealing with in terms of how they can capture measurement and how they can capitalize on the data that they collect and help the advertisers and that they serve. That was a difficult task, and it took the better part of a year to get it right. Obviously, at the same time, there's under-monetized assets like Reels, and then like I said, getting religion on the cost side is what it comes down to. We did trim. This was over a 10% position heading into the quarter. We did trim a little bit heading into the print today, just because this market is slightly fragile. But at the end of the day, and also the buy side expectations were getting a little lofty. But at the end of the day, this is a stock that's trading at about 20 times earnings, not that egregious of a multiple, and the opportunity for the top line to remain at healthy levels for the foreseeable future.
Quick question on Meta when it comes to Facebook Reality Labs, because a little bit of a dose of realism there. The first quarter sales missing expectations, and that's kind of critical to watch because the metaverse is so core to Mark's vision for the company moving forward. Does that concern you at all in terms of where Zuckerberg may be most interested in pouring resources into the company moving forward?
It will concern me potentially in the future. At this juncture, not yet, because we have a pretty healthy view of what the earnings picture is going to be for this year and next year. Now, if that spend gets out of control where we have to temper those expectations, then the calculus would definitely change. But at this point, as long as we're performing along that trend line of earnings growth that we predict, I think it's okay.
I'm just looking at the press release too, James, and Mark Zuckerberg is saying, of course, he's the Meta founder and CEO. He said, "We had a good quarter and our community continues to grow. Our AI work is driving good results across our apps and business. We're also becoming more efficient so we can build better products and put ourselves in a stronger position to deliver our long-term vision." That long-term vision is the metaverse, right? And this is the year of efficiency. So he uses the word efficient again. I mean, this is what's kind of driving this company. I mean, is it strategy? Is it cutting costs? I mean, how do you see it?
I mean, the way we're investing is we want to invest in companies that have the best possible control over their own destiny. There's so much noise in the market right now, everything that's happening in the financial markets, what's going to happen with demand, recession, banks, and whatnot. Which companies have the most control over their destiny? And Meta and Zuckerberg at the helm seems to be acknowledging that and working toward optimizing it and maximizing the potential of what they can from the aspects of their business that they can control. So long as demand and the economy stays relatively constant from where we are, they have even more control over their numbers for the next year or two. I mean, some of the buy side expectations have creeped up to $17, $18 per share,
right,
in earnings estimates for next year, which is actually north of where we are. So that's why we were a little cautious.
Really quickly here, we've got 20 seconds. 1% headcount decrease for Meta. Are you concerned at all that they're not going to be able to maintain those cost-cutting measures heading into the rest of this year?
Real quickly.
I mean, at this juncture, no. I think we'll see what happens, but ultimately, as long as it performs along the trend lines that we have predicted for the time being, I think all will be okay.
All right. Listen, hey, thanks, and thanks for your patience as we work through those Meta numbers, which kind of came in a little bit late, at least in terms of what we were expecting. James, thanks. James Chakmak, he's partner and technology analyst over at Clockwise Capital on Zoom from Miami. We are seeing shares of Meta. They're rallying in the aftermarket up about 7%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check the markets all day long here at Bloomberg. Earnings once again fast and furious. And yes, that's what we do here at Bloomberg. Meta platform shares surging after ours. Meta right now up 8.7%. It's out with first quarter revenue that topped analyst estimates and signaled the beginnings of a recovery in digital advertising. James Chakmak is technology analyst at Clockwise Capital, and he was our guest moments ago right here on Bloomberg Business Week.
This is a company that it took the bull by the horns when it came to getting religion on the cost side. And I think as we anniversaried in January the advertising changes at Apple, the setup was pretty well for the year.
And again, Meta shares after ours, right now they are up by 8.5%. Also reporting after the close of trading today, we heard from eBay, and it is projecting revenue in the current quarter that exceeded analyst estimates, suggesting that the e-commerce company's efforts to boost sales after a post-pandemic slump are paying off. Investors, they're bidding up eBay shares, up now by just about 5% after ours. A headline from the Bloomberg Professional Service: Pioneer Natural Resources has named Richard Dealey as the company's next chief executive officer. We'll have more on that as those details become available. Stocks mixed today. S&P tumbled 15 points, ending close to session lows, down by about 0.4%. The Dow down 228, drop there of 0.7%. Nasdaq, though, up 55, a gain of 0.5%. 10-year yield 3.44%, with the 2-year that's yielding 3.93%. Gold down $8.50 the ounce to $19.88, and West Texas Intermediate crude down 3.6%, $74.33 a barrel. Again, recapping, could not ignore Meta Platforms, closely watched after ours. The stock now up by 9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, some strong outperformance. All right, Charlie, thank you so much. All right, so that was the latest on Meta, which reported after the close, as you know. But shares of Boeing reported much earlier today, closing higher just a hair, up about 0.4% off its best levels of the day, which was about a gain of 4.7%, but still up on this Wednesday after it reported earnings before the open. It also provided some details on the business and outlook. And on that, Boeing said it plans to hike output of its cash cow 737 jets later this year, so that maybe gave some reassurance to investors. So let's get into it with Bloomberg News aerospace reporter Julie Johnson. She's with us. She's on the phone from Chicago. Julie, good to have you here. So let's talk about the news on the output. That's what moved the stock? Connection lost. Is that fair?
Well, I think it was the output, and if you step back, there was just a huge sort of sigh of relief by the market that this latest 737 manufacturing glitch, which just came to light this month, that Boeing actually seems to have its arms around, what's going on, and it's not going to derail the bigger plans that Boeing had, for turning around its finances this year.
But are there still concerns about the amount of information we have about the scope of the repairs that are needed for those 737s?
The company actually provided quite a bit of detail around that on the call, and I just moved a story for anybody sitting near a Bloomberg terminal with some of this. So it's looking like this is obviously not something they want to deal with, but it's not a showstopper. So for planes in their factories that don't have the tails attached, and this is all about some very, very key fittings where, the horizontal stabilizer, that big tail, nestles in with the rest of the plane, the tube that carries passengers. So it's a key component, though. This issue is not a threat to safety. But anyway, so for planes in the factory, they're talking about days for repairs. For already built planes, it's weeks.
Yeah, I'm reading your story now, so thanks for giving us a heads up. Folks can check it out on the Bloomberg terminal or head to Bloomberg.com. But you note that potentially hundreds of 737 jets built since 2019 are affected and will need to be repaired, according to analysts. So in other words, what's great, Julie, is you don't need to be concerned. We figured out what we need to do. It's just going to take some time, and that has an impact on the company.
Yes, it sure does. And so Boeing still thinks that they're pushing everything out a few months, but they still think they can get back onto the same path that they were, like 3 weeks ago when they looked golden. And I think that's what the market sort of rallied around today. But there's always risk. And when you push things out late into the year, if new issues crop up, you don't have a whole lot of time to deal with them. And so timing now sort of becomes a risk to the 2023 comeback story.
Yeah, I have to say, just on a personal note, reading your story freaks me out a little bit, and I'm fascinated by the CEO's sort of candor, saying that it was gnarly that an employee raised their hand and noticed a bad procedure and everybody jumped on it. But it does sound like they were able to resolve those issues with the FAA really quickly when it comes to those defects on the 170 already built jets, correct?
Yes, that's correct. And I think actually the whole way this was handled in the messaging is a break from sort of the drip of bad news that we saw, over the years of the MAX crisis. So the fact that the company got out ahead of this, that they've been somewhat transparent in sort of sharing what they know and what their plan is, that's definitely a break from the past and something that the market seemed to reward.
Well, and it's interesting, I also do wonder about, it's good to know about 737. It's like the plane that just keeps giving them issues. Let's put it this point. I mean, they were very serious issues, as we know, several years ago. But it's certainly a concern. What are we hearing from Boeing about order flow and what it tells us maybe more broadly, Julie, about the economy?
It's fascinating. They said that they're in the midst of some really big order campaigns, and that customers are talking about lining up planes into the 2030s, and it's 2023. Wow. I mean, that's just unprecedented. That's crazy. And I mean, that also sort of underscores the urgency here that Boeing, around Boeing getting its act together on producing the 737. That's where the company profits come from.
This plane, this one is crucial.
This one is crucial.
All right, we're going to leave it on that note. Listen, Julie, thank you so much, and I'm glad we were able to kind of squeeze in that other story that you just put out on the Bloomberg. Julie Johnson, she is our aerospace reporter at Bloomberg News, joining us on the phone from Chicago. We did want to go back to Meta because this stock is certainly on the move in the aftermarket, and that's after the company came out with its latest results. First, to the share price, it is up almost 10% in the aftermarket, and the company, really outperforming here. Revenue outlook, topping estimates, and that is certainly a big one. So it's the second quarter revenue, and we're talking about $29.5 to $32 billion. The estimate on the street is $29.48 billion. So that gives it some room to really beat what Wall Street is expecting.
Yeah, and to your point, Carol, the gain is sizable, but it's in line with market's expectations. I got a note from Ben Emons with New Edge Wealth, and he said that, they're up 11%. Now they're up a little lower on 9%, bumping around, but this is exactly what the options market was implying. And he also said that he's concerned again about that miss on 1Q sales for Facebook Reality Labs. Is that going to be an issue when it comes to Mark Zuckerberg's vision and focus on the metaverse specifically?
Now, here's something that could potentially be another catalyst for the stock. Meta weighing in on the IDPC decision. They expect it to issue that decision in May. We're talking about the Irish Data Protection Commission, which is looking into the personalized advertising model in the EU and potentially forcing Meta to kind of change that, if you will, some costly changes to its advertising, and it could mean potentially a fine as well of a few hundreds of millions of dollars. I'm looking at one number of about $414 million. So the IDPC, the Irish Data Protection Commission, looking into finding the company and potentially leading it to an upheaval of its personalized ad model in the EU. We know the EU is much more stringent when it comes to social media and models and privacy issues. So that might be a potential overhang until we know that outcome.
Yeah, and we're seeing that there's potentially some indications in the earnings slides here that Instagram Reels is doing well for Meta, both in Europe and the US. We're seeing the average revenue per user is up from the comparable quarter as well, which may mean that they're starting to figure out how to make some money off of those Reels. That's something that they had been struggling with previously, and it's going to be interesting to see if kind of the year of efficiency model that Mark Zuckerberg has focused on also allows them to continue to, gain some profits when it comes to advertising across all of their platforms.
You mentioned Reels. Meta was able to increase Facebook's daily active users in the U.S. and Europe, a big deal. Or Sarah Fryer saying that probably has to do with Reels specifically. So interesting to do that. Mark Zuckerberg also mentioned AI in the release, talking about how the technology can boost apps. He did not say anything, though, about the metaverse. So we'll see whether or not what kind of context we get on the call. Where do they focus their efforts? What does the majority of the conversation, what does it focus on ultimately? But it's the core business of what Meta, really formerly Facebook, is known, right? Going back to that core business, and we saw some outperformance.
Yeah,
big time.
Yeah, and that's getting rewarded, it looks like, in the trade as we wrap up the day here.
Yeah, so Meta shares in the after hours, we're looking at them up about 9.7% here. So this is something we're certainly going to follow into the Thursday trade. If you think of Meta specifically, certainly key, it makes up about 3.6% of the NASDAQ 100. All right, right now we do want to get a check on world and national news. It's back to Nancy Lyons. She's in our 99.1 newsroom in Washington, D.C. Hi, Nance.
Thanks, Carol. President Biden and South Korea's president have spent the day together at the White House. Biden says they discussed increasing security on the Korean peninsula.
There's even closer cooperation, closer consultation, and we're not going to be stationing nuclear weapons on the peninsula, but we will have ports visits of nuclear submarines and things like that.
Biden did say any nuclear attack against the U.S. or its allies is unacceptable. As the U.S. inches closer to defaulting on its debt obligations, the House is voting on a bill today that would tie the raising of the debt ceiling to spending cuts. The bill is part of Speaker Kevin McCarthy's plan for budget reform. House Majority Leader Steve Scalise spoke ahead of today's vote.
House Republicans are not going to sit on the sidelines. We're going to lead and present a solution. That's what this bill is.
Scalise says it's time to rein in spending. The White House says House Republicans are selling out hardworking Americans in order to restore the Trump tax cuts for the wealthy and corporations at a cost of over $3 trillion. The New York author who is suing former President Donald Trump for allegedly sexually assaulting her in the 1990s told a jury today she wants to set the record straight.
E. Jean Carroll says she kept silent for decades out of fear that Trump would destroy her if she went public. Today in Manhattan federal court, she said, quote, "I am here because Donald Trump raped me. And when I wrote about it, he said it didn't happen." The 79-year-old said Trump shattered her reputation and that she's trying to get her life back. The jury of 6 men and 3 women will decide if Trump is liable for sexually assaulting Carroll more than 2 decades ago and defaming her last year by claiming on social media that she fabricated the attack to sell a book. He has denied any wrongdoing. Jill Schneider, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We check markets all day long for you here at Bloomberg, and we are keeping an eye on shares of Meta Platforms as we look at after-hour tradings. Right now, high of the session up 11.6% for Meta Platforms. Meta, of course, the parent of Facebook. It surged after reporting first quarter revenue that exceeded analyst estimates and signaled the beginnings of a recovery in digital advertising. Now, also reporting after the close of trading today, eBay. It rose after projecting revenue in the current quarter that exceeded analyst estimates. After hours, shares of eBay, they're up now by just about 4%. Turned out to be a mixed session. We had the S&P closing very close to session lows today. S&P was down 15 points. That was a drop of about 0.4%. The Dow down 229 points, lower by about 0.7%. NASDAQ up 55. That was a gain of about 0.5%. Stocks ended lower as fresh concerns about the health of American regional lenders dragged down bank shares. First Republic down 29.75%, but big tech earnings helped support broader sentiment. Well, as for the overall market backdrop, Walter Todd is the president and chief investment officer at Greenwood Capital, and he was our guest right here on Bloomberg Business Week.
We've been trading in this range from 3,800 to 4,200 in the S&P for a while now. Obviously, we got below it in October, but we touched the kind of towards the upper end of that range. I think there's risk to trading back down. The debt ceiling's still hanging out there, and we got a lot more earnings to go over the coming weeks. So I would say probably just a little bit more cautious right now.
10-year yield 3.44%, with a 2-year 3.94%. Spot gold down $8.50 the ounce to $19.88. Drop there of 0.4. West Texas Intermediate crude down 3.5%, $74.40 a barrel. Amazon.com pulling the plug on its line of Halo health devices as CEO Andy Jassy seeks to wind down marginal programs and streamline the retail and cloud computing giants' businesses. Amazon, which reports earnings tomorrow, up today by 2.3%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just want to mention crossing the Bloomberg terminal because we did this for Bloomberg Business Week. You might recall the story. Pras Michel, a Grammy-winning rapper turned political influencer, convicted of conspiring to wage a back-channel lobbying campaign to end U.S. probes of Malaysian tycoon Joe Low and get American authorities to extradite a dissident Chinese billionaire. So, again, a developing story and just crossing the Bloomberg terminal. Head to Bloomberg.com if you want to hear a little bit more on that story, but just interesting. And like we said, we did do a feature story on this in Business Week recently. All right, right now, we want to get to some of the trends that are going on in the workforce. We're kind of counting down not only to a Fed meeting, but our next read when it comes to the labor market. And with us is Emma Codd of Deloitte. She's Global Inclusion Leader, and they did a survey that looked at, they do an annual report on women specifically. It's out today, and what they found, one of the findings, 1 out of 5 women surveyed have left their employer in the past 12 months. That's a pretty big statistic. So let's get to it and get some understanding of who they talked to and more on the findings. Emma joins us here in our Bloomberg Interactive Broker Studio. Great to have you here. I do feel like this is very indicative of our times post-pandemic. Welcome.
Thank you. It's great to be here.
Nice to have you here. So tell us a little bit about who you surveyed specifically.
So we surveyed 5,000 women in the workplace across 10 countries, really to try and get a good global outlook. So, European countries, sort of over to Asia, Latin America. So really a good representative sample. And they're effectively women in work, in roles, in jobs. 88% of them were in full-time employment. And that's actually interesting when we come on to the flexible working findings, because I would say some of those would rather be in part-time employment.
Right.
But given some of the issues that we've identified, they're not. They're working full-time. And the aim for this research, as you said, it's our 3rd year, is really to understand. So it's less about policies, less about processes, to understand women's real experiences, and actually to come, what is the secret sauce? Come up with recommendations that businesses can use, because we're not making enough progress.
So what was the main thing then for businesses in terms of a takeaway
I would say, look, there are a couple of main takeaways, things that really actually concern me. Last year, we saw very high numbers around burnout, around exclusion during hybrid working, around non-inclusive behaviours. And I do think that was partly a sign of the times. We were in this weird sort of coming back to work slowly, and we were, you know, what we'd been through the last couple of years. This year, those numbers have come down, but I want to really emphasise they're not good. They're still poor. So specifically, you look at mental health. Mental health, you know, more women are feeling very stressed. You know, you ask them, are you feeling more stressed than you were a year ago? Yeah, around half of them are. Always on. There are more women who are saying, I feel the need to always be on. So that's a big hangover from pandemic times. It's worse than last year. But fewer women feel comfortable talking about mental health at work.
Emma, hang on for a second. Like, how would you say this compares to pre-pandemic? I was pretty frazzled pre-pandemic.
I was pretty frazzled pre-pandemic too.
So is it, because I'm trying to get an understanding of, like, you know, pandemic, which was lousy.
Yeah.
And so many people had very difficult situations. But I'm just wondering, you know, I have to say, my first few months, I love being home from me and my family. It made us all stop for a moment.
Yeah.
So I'm just wondering, like, how do you think about it that way? Since you've been doing this survey since the pandemic.
Yes, and we did a pulse during the pandemic, and the pretty bad findings well from that. So how does it compare to pre? Look, mental health has always been an issue. You know, we have our physical health, we have our mental health. It's just talked about more, and I think the workplace, I think how it compares is the workplace has started to talk about it more because of the pandemic. But, you know, the mental health and mental ill health has existed long before that. Always on has existed long before that. I think we got into habits during the pandemic that I don't think they're going away. And then I think hybrid working is something that's new. You know, we didn't, some of us hybrid worked, just we didn't call it hybrid working. Hybrid working is a new way of working that, you know, is still some challenges there for women. So, you know, non-inclusive behaviours. 44% of women have experienced non-inclusive behaviours in a workplace context in the last year. How would
what does that mean?
So that effectively means microaggressions or harassment. So of the respondents, nearly 2,500 women said, I experienced it on at least one occasion, a behaviour that was, you know, was a microaggression or harassment. So, you know, and was that probably the case? Yes. I mean, you know, workplace culture has long been a challenge, and it was a challenge pre-pandemic.
Right.
Yeah. We had a story the other week on the terminal from Pew Research data showing that U.S. women now make as much or more than men in half of marriages.
Right.
But I think that's really interesting to square that with some of the findings that you have on women still feeling the need to deprioritize their careers. Can you talk about the dichotomy there?
Yeah, and this is interesting because the survey's been going for 3 years, but this is the first time we wanted to find out about responsibilities in the home and about prioritization and who is the primary income source. And the findings, were they surprising on the share of household responsibilities? Sadly not. They weren't. So we had, you know, just under half women saying, I have primary responsibility for that. Only 10% of women said their partner did. So that's the first thing. And don't forget, most of these women are working full-time as well. And then when we looked at income source, majority of women were not the primary income source. Majority of them prioritized their partner's career over their own. Now, the interesting thing there is that was still 1 in 5 for women who are the high earner. So we had, so, you know, 2 in 5, we're not, 1 in 5, we're not. So there is this challenge, and to me, it's like this sort of vicious circle almost, because if you're deprioritizing your career, then your chances of becoming the primary earner in the household are reduced.
Well, okay, so just got about 45 seconds left here. Yeah. So what do you do with this? Because I feel like we spend years and years, like we pull data. It's very useful. I think it gives us a great snapshot of what's going on. But so many times it doesn't get put into action.
Yeah. So what do we do with it? We need to know that we do not need to fix women. We need to fix the workplace. Okay, that's the first, what we do with it. This report, what I love about it is it's data-driven. It shows the impact, and it shows the positive impact. 5% of women work for companies that are getting it right. So any employers out there, you can look and see what is the secret sauce for those companies. It's around culture, it's around process, it's around support, it's around removing barriers. That is what we need to do. If we take this seriously, which we need to, then we can make a difference.
And when it's a tight labor force, which it still is, workers are going to move to where they think they're going to have all of these things that they're looking for, and as you're seeing in your survey.
Absolutely.
All right, Emma, safe travels home.
Thank you very much.
Nice to have you here. Emma Codd, she's Global Inclusion Leader at Deloitte here in our Bloomberg Interactive Broker Studio. You're listening and watching Bloomberg Business Week on this Wednesday. Carol Massar along with Madison Mills, and this is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
4:53 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. Shares of Meta Platforms, parent of Facebook, continue to push higher after hours. Right now looking at a gain of 12% on Meta Platforms. Stock is surging after reporting first quarter revenue that exceeded analyst estimates. Also reporting after the close of trading, eBay better than expected numbers there. eBay shares, they're up now by about 2.6%. Microsoft says it will appeal this morning's ruling by Britain's Competition and Markets Authority. Microsoft's $69 billion takeover of Activision Blizzard was vetoed by Britain's antitrust watchdog in a potentially fatal blow for the gaming industry's biggest ever deal. Now, Microsoft, after earnings today, did advance 7.2%. Shares of Activision Blizzard today declined by 11.5%. Well, as for the overall backdrop and what is happening with Microsoft and earnings, Ann Berry is managing partner and founder at Threadneedle Ventures.
I think that the market's saying that they don't mind if Microsoft focuses on continuing to do what it's doing, which is throwing off good cash flow, focusing on cost containment, and doubling down in areas like AI, which is an overused term but has captured the imagination of the market. So I think the market is saying, you know what, Microsoft, keep doing what you're doing, we support you.
Walt Disney suing Florida Governor Ron DeSantis, alleging he is retaliating against the company for speaking against his policies and threatening billions of dollars in business. Disney down today by 1.4%. Those are our top company stories at this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Hi, folks. I'm Madison Mills here with Carol Masser. We are still seeing Meta stock up about 11% in the after-hours trade here. We're going to continue to cover that story and more. But first, let's get a check on the latest world and national news with Nancy Lyons in the 99.1 newsroom in D.C. Hey, Nance.
Thanks, Madison. President Biden is hosting South Korea's President Yoon Suk Yeol for a state visit. And after a longer-than-expected meeting at the White House, Biden said this afternoon they've reached consensus on a variety of security topics.
The Republic of Korea and the United States are working together, including through our trilateral cooperation with Japan, to ensure the future of the Indo-Pacific is free, is open, prosperous, and secure.
The U.S. is also planning to strengthen deterrence in the region by deploying a nuclear-armed submarine. For the first time since the Russian invasion of Ukraine, China's President Xi Jinping has spoken with Ukrainian President Volodymyr Zelensky. China plans to send a delegation to Ukraine, although there's no timetable for that visit. Ukrainian allies have dismissed a Chinese peace plan as being too one-sided toward Russia. Another former Republican governor has declared his presidential candidacy, Asa Hutchinson of Arkansas. Bloomberg's Irv Chapman reports from Washington.
Hutchinson said he's in a battle for the soul of his party as he restated his goals since he first ran for Congress.
I stepped up to take on runaway federal spending, to fight for a strong national defense, to support the life of unborn children, and to unleash the private sector of our economy.
Hutchinson, who has criticized Donald Trump, though not by name in this speech, rejected isolationism, and he called for Ukraine's victory over Russia. In Washington, Irv Chapman, Bloomberg Radio.
Walt Disney Company is suing Florida Governor Ron DeSantis, alleging he is retaliating against the company for speaking against his policies and threatening billions of dollars in business. The lawsuit filed today in federal court in Florida accuses the governor of orchestrating a, quote, targeted campaign of government retaliation. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.